Yeah. Welcome to Staking Stock. It's like, I should say taking stock, not staking stock. That's a different thing. Taking stock with me and John Human there. You know what, John?
Not too bad, thanks. Right? Not too bad. A bit overwhelmed today. There is a lot of news out. It's an avalanche of news today.
Yeah. Well, listen, the subject of the day is this, and I looked at this on a webinar last night, and I was saying, are the UK's most shorted stocks an opportunity? And I think they are. I think they are, because shorters don't always get it right. And I'll explain a bit more about that anyway. But before we start, listen, if you're listening right now and you haven't subscribed, please subscribe. We are 5 away from 3,000. If you are number 3,000, John will personally give you an investment tip.
I will not.
but hit that subscribe there if you could, and comment below. Get involved. We want to create a little community to talk about small cap, micro cap stocks. There's lots of passion out there on Twitter, but please get involved. Check some comments below. And in fact, there's a comment from yesterday, Investomatic, and I've been blamed for ramping, and I don't understand what that is. I've shared information. I don't share anything false. I'm not a pump and dump. I don't dump stocks. I don't pump and then dump them. That's, in my mind, very bad. I try to hold stocks as long as I can. If they keep performing, I'll hold them. You know, that's what I think. But Investomatic say, loving the movement in Destiny Pharma right now. It is doing very well. And in fact, let's look at a chart of that quickly. I'm not. It's future. I don't own future anymore, but it's done very well. I talk about momentum there, and I was saying a lot on Twitter. Momentum, you should never ignore it. You can look at companies that have good sort of fundamental backing and all that stuff, and it's very good. But if you get in and there's a downtrend on, and the momentum is not there, you can continue in the downtrend. I've studied more and more about this in the bear market than any time ever. You know,
momentum is an incredibly powerful factor in investment returns. I mean, it's one of the most powerful factors. The problem with momentum, you see it here. Both on the downside and on the upside is that it carries on until it stops, and that point at which it stops, you never can tell when that's going to come.
Yeah, I think sometimes if companies are undervalued, it can have a momentum. Like they're a 40 million market cap. Compared to what the assets they have, that's nothing, and they're very advanced. But, I've been in stocks and I've got into stocks many a time. And I said, they've been going down. And I said, it doesn't matter. The valuation is great. And they've continued to go down. And you see that. And it's self-fueling, because you often find that, sellers will a falling price will attract sellers, a rising price will attract buyers. So it almost creates an energy of its own, sometimes.
That's true.
Sometimes
that's true. That's the nature of markets. But if you are buying into a share that is falling, but you have done your research, you have confidence in that business, then that shouldn't be something that worries you as an investor.
Well, if you're down like 50% on your portfolio, you just start to worry a bit.
But if your time horizon is long term and you are sure, because of your research, that the market is just simply not recognizing the strengths that you believe are in a business, then use it. I mean, I'm not one to advocate averaging down, because it can get a bit messy. But think of it, if it's a company that you've done your research and believe it, there's an opportunity to just pick up a few more shares at a lower price.
Yeah, I advocated averaging down in a bull market because you're buying a dip. But in a bear market, you're buying a downtrend, and it can be very painful. And then what happens is your portfolio gets skewed towards your losers rather than your winners. And that's a painful thing. And now I think, why not use a bit of timing? Why not wait? I know it's hard to have cash. I've had cash for a little while now, and I find it for the first sort of few weeks, months, I find it almost burning a hole in my pocket, in my portfolio. But now I think, no, there's better opportunities if you wait, and it often comes to you. Anyway, that's my
yeah. But if something's falling, and as I say, if you believe in it, you also shouldn't be panicked by a falling share price into selling out of what
do we agree?
Going to be a good position.
Me and you, right? Me and you, do we agree on anything?
No.
I know. Which is good. That's a good thing. It's like the market. It takes some buyers and sellers. We're short and long. Alistair Edwards from yesterday said, we talked about multi-baggers. He said, I've a good haul of multi-baggers, KR1, GGP, AVCT, that's Avacta, NCYT, Ondo in the UK. Do you know what? Alistair, why don't you come on the show and give you a couple of tips out? But and he says CLCS and HUT8 and Hive in the US as well.
NCYT, isn't that Novacyt?
Never we'll look at that, Dick. So
Because I suspect that you could have multi-bagged that, but then lost it all again.
Yeah. Oh, yeah. It was one of the best. I think it was the best performer in 2021. It did I think off the top of my head, like 3,000% or something ridiculous, or somewhere around there. But and because of that, other COVID testing companies then started rising. So this is the next Novacyt, and they never quite paid off. But a Novacyt here, big like trick of cash.
This goes back to the point I was making about momentum. Just quickly have a look at that chart. You've got huge momentum on the way up.
Yeah,
but then it stops.
Let me look at
then it stops.
Yeah.
Momentum doesn't last forever, and there is an.
It takes a while to come off, though. People don't almost. People refuse almost. If you're looking back in hindsight, this is quite an obvious momentum dire here, because you've got like I said, if you look at charts, let me get rid of the RSI a second, and an obvious break there. You fold that out. An obvious break there, almost golden cross. That is the golden cross on the upside and death cross on the downside. 50-day moving average crosses the 200-day, and then it starts to rise like crazy. Okay, that was a bit of a worry here. Then it starts to go up and up and up, and this is just the start of it. So it went from 16 pence up to 12 quid. But then, have you seen this double top? Double tops are a classic sign. When it rallies again, it sells off quickly, goes back along the 50-day moving average, and it hasn't touched that for a long time. And it breaks down. Something wrong here. So a lot of people maybe got up there, but then it rallied again because you've got this momentum. The people who missed out, thinking it's going to go higher again, probably jump in. And you almost get what you get then is that the sell's been filled. There's people queuing up. There's buyers queuing up to take, because you see microcap stock sometimes. You can't buy. There's nothing to buy. Until someone sells, you can't buy anything. And then you often get, say, 2 buyers for 1 seller, and it'll take it back up. But the fact it didn't beat that previous high was a big sign there. And then it went down over the 50-day, and like I said, it doesn't do that very often, and definitely hasn't gone over the 200-day for a long time. And when it hit that level, 6.5 quid, you should have sort of got out because it's in a downtrend. And now we're back to it's like 58 pence back to where we were.
Yeah. I think ride momentum, but never lose sight of the fundamentals. Never lose sight of the fundamentals, because they can get you out of that position with your profits intact.
Yeah, I completely agree, but I think both. There's no reason why I can't mix both, because
100%.
Yeah, I will look at companies. I put companies through spreadsheets and stuff, and I've got to see a fundamental, sustainable rise in the company. Does the company have scale? Whatever, is it growing in some way? Is it a big market? All that's going to line up, and then the technicals are going to kick in as well, because then it's going to be a bit of momentum.
Right, let's move on.
By the way, so I want to talk about and I put a bit of a thing here. Look at this. This is the most. These are a list of the UK's most shorted stocks. Okay, Cineworld. Okay, that's a quite obvious one. Petrofac is 7%. Kingfisher 3%. Tullow Oil 4%. International. I don't know what they are. Do you know the international distribution?
No, I don't know them.
2 companies I looked at, and I've held future, and I went up recently, and I put a stop loss in above where I bought at. So in my mind, it's a risk-free trade, a trade or investment. I couldn't lose. It came back down, tripped it out. Fine. I didn't make any money, didn't lose any money. That's fine. I thought the chart isn't acting right here, and ITM Power is one as well. But look at the chart on future, right? And I'm thinking it didn't act right. It should have broken up a couple of times here. You can see, previous highs. It broke up above 50-day moving average, broke previous highs there, and a big up day there, 11%. And all of a sudden, it matched the same day, pretty much 7.5% down, and it broke back down below level, and I tripped out here. And I realize now what that is. There's obviously there's something wrong with the market there. It's not performing properly because there's a shorter there. It's a shorter. There's something going on with the stock. So I'm saying if the company is fundamentally, if this breaks up here, this breaks up towards the upside, and the shorts have to cover, you could see a very aggressive rise, because of course you have to buy stock as well, cover the short, buy the stock. So, and it's happened a couple of times, and in fact in America, I think there's a classic with these meme stocks, isn't it, where they're massively shorted, and in fact they're overly shorted to the point that this one guy looked at I don't know what group it was, but they were 120% shorted.
GameStop.
Yeah, GameStop. Yeah. How does that happen? So they borrowed stock of other people, 120% shorted, which is impossible because there's only 100% stock. But when that's unwind, what I'm saying is you could see a major reversal in some of these companies if they come up with some good news and the shorts have to cover.
Short covering. Yeah. I mean, I've got a slightly different list. I've got Kingfisher at the top of mine. I've got Boohoo's up there, Ricardo's up there.
Here's another one, ITM Power. We looked at this the other day. ITM Power, it's the biggest hype stock in the world, pretty much on the UK indices, because it hit 2 billion on little revenue. I do hold a little bit of this, right? And I've got a stop loss in them. I'm now above, if it drops, I think my stop loss is about there. So if it drops there, I'm out and I haven't lost anything. But I believe if this breaks out here, You know, again, the same kind of thing will play out. They may have to cover their shorts, but so I'm, you know, I'm not going crazy. But what else is there? So, and these are things. Biggest increases in the month. So these are AFC, and you realize why AFC isn't performing as well as ITM, because that again is literally it's got come down where it should have rallied, and it's literally not it's not performed as well as ITM. Maybe ITM's got more momentum there.
Yeah, they had a nice contract yesterday, AFC Energy.
Yeah.
4.3 million grant, UK government grant for red diesel replacement. So yeah, you know, again, it goes back to what we were talking about yesterday with hydrogen. I think you know there was a lot of hype around it as those share prices show, but there's scope, there's potential in this industry.
Yeah, exactly.
The shorts definitely don't always get it right.
No, definitely. I mean, Moonpig is a good example. The reason why the biggest decrease this month, right? Obviously, the shorts were, you know, bigger on that. But Moonpig chart, if we looked at that, I don't know where I looked at, but the chart is looking good, and it's really that to me. It's getting away from the shorts, and you can see here a couple of times I put this in a range in. They broke above this range, didn't quite get above the previous highs here, and they broke up. Okay, and now that's a golden cross here. So I reckon they're going to. And if you look at the fundamentals of Moonpig, it isn't that spectacular. But the fact that now the shorts are reducing could mean it could keep rising because they have to rebuy some of the stock, and you know that's like a cold spring ready to go. But that's a good looking chart. You know, it's breaking up, turning a golden cross there. So I quite like that. But so I'm going to put alerts on all those companies. I do all little ITM, but on some of those companies, if they start sort of moving up above, it puts pressure on it. What I'm saying, if you see a stock moving up, it puts pressure on the shorts, and if they have to close and cover that, it may move higher quickly, aggressively.
It's quite an interesting idea for a strategy.
Yeah.
You know, pick the most shorty companies as you sort of re-enter. You know, slightly better market conditions, and see if you can beat the shorters. Why not? I'll have a look to see what happens. We'll have to revisit that.
So listen, let me just I want to put a chart. This is the biggest riser today. Hang on, where is it? Mila, I think it is. We got that on the front page. There we go. Share screen. Mila.
Yeah.
What do you know about it, John?
It's after lithium, isn't it? It's the hot commodity.
It is. Look at the chart on Mila here.
Yeah, and it's signed an agreement to explore for lithium with a company called Linetown Resources.
So Lion, I don't know much why I've risen so much, but Linetown is an AXS lithium developer, market cap at 6 billion on the ASX, and they've already got deals, offtakes under the pros transaction. So basically, the option agreement with LBM, which is a subsidiary of Linetown, granting Linetown the option to explore for lithium on their Kathleen Valley license. Now they've already got deals, Linetown, with LG, Ford, and Tesla. So already they've got the supply chain sorted out. So that's why it's risen very quickly. But Linetown has the option to acquire 80% of the lithium rights from Mila for a total consideration of 2.2 million through a phase investment program. And I assume they get money from that as well, and all that stuff. But chart has gone a bit nuts there. Look at that.
There you go, the lithium effect.
Yeah. What is the market cap of Mila? It's about 2 million, I think.
Not a lot.
Yeah.
Not a lot. So, probably lower than the
7 million. It's up 90%. There we are.
There you go.
take us through some of the content, Joe. We'll cover the other risers and fallers there content-wise.
Fintel trading updates. So I really like this company.
Yeah.
Basically, it provides technology, back office solutions, etc., data solutions for the retail financial service industry. So that's IFAs. It's fund groups that are making products, and you know they buy intelligence off Fintel to help them do so. It's really, you know, it's got some really aggressive expansion plans. What it wants to do is essentially build, you know, an end-to-end solution for retail financial services, which, if the truth be told, is somewhat behind the curve. You know, like banking in terms of its adoption of, you know, next generation technologies. So Fintel's doing that. It's up an incubator quite recently. It's taking strategic stakes in small tech startups in this space. It's making a few acquisitions within the group itself. Trade is pretty solid. Profits are rising. You know, what's not to like about this company?
Yeah, what I do, I quite like the chart, because what you've had is almost a downtrend coming down, and then oversold, obviously here. What's the RSI here? But it's coming down to oversold. You've had a nice, strong sort of almost V shapes of recovery, which are not sustainable sometimes. They're not sustainable at all. And you've got to be careful of that kind of recovery, because it needs to come round. You get this bowl effect then coming round. And if it pierces, I put an alert in there, if it pierces a previous highs there, then it'd probably go higher. But this is where you say, when you have that, great rally from a bigger company beyond from 170 to 220, in a couple of months, and then people have taken profit, it's come down, it's consolidated, and now you've got a bit more sustainable rise, and hopefully it'll break above that. But I do like that. You see, it's now above 200-day moving average, it's above the moving averages, so it's quite nice. And it's gone from a downtrend and it's starting an uptrend.
Yeah,
so
it's one of the few ways I would say that you can really buy into fintech, in any meaningful, profitable way. On the London market. It's great company.
What else on the front page there?
So we've got Oxford Cannabinoids, which is developing sort of cannabinoid-based medicines, taking one of its treatments through to phase 1 trials. This is it's basically pain management, and again, I think we spoke about this the other week, but I think it's a big market. Given that we have seen issues in the pain management industry over in the US, which has essentially sparked the opioid crisis. This particular treatment is basically to do with chemotherapy-related nerve damage and irritable bowel syndrome, which is massive, which is a huge problem for a lot of people. Very, very nasty thing that a lot of people suffer from. So
Well, let's
meet a real need. And then finally, we've got Greenroc.
Look at that. Just look at the chart. To me, that almost the downtrend has ended. Then again, it's a big rise there, bigger rise again, consolidated. But you can pretty much say that was probably the low there of 0.5. It's doubled to where we are now. In fact, more than that, 1.5. But
nice interview on Vox Markets website with the chief executive, who really explains this business really, really very well indeed. So go and have a look at that. The final thing we've got today on the site, as I said, there's more coming later, is Greenroc. Which has basically put an operational update on its mines in Greenland. It's mining for graphite. It's making a lot of progress there. It's a really interesting resource, and it's got a really, really, really strong management team that are going to moving this rapidly forward to production. A lot of interest in this because it's a very, very high quality graphite deposit, which is exactly what you need for EV batteries.
Yeah, I forget the percentages now, but graphite's a big chunk of the lithium battery. In fact, didn't Elon Musk want to say it should be called a graphite battery because there's that much in there. But do you know what? We've seen a lot of charts like this. You're seeing obvious almost lows and that's why I keep saying the bear market bottom is behind us, because you're seeing a lot of bounces, and this is not the October lows, is it? Recently, and it's happening a lot. So I quite like that.
Bango, there is so much news out today.
We've had a comment on Bango. Who is it? I think Michael says shares, I think, are percentage. Bango, half your results today. I think it's already motor in 2024. It's off its highs. Do your research. Disclosure I hold. I suspect you, but thanks. Yeah. To me, that's, I don't know much about it fundamentally, but I don't like a chart like that. It's like, I can't find any kind of pattern there. It's really volatile, and a bit messy. So I'd want to see it calm down. Even now, it's like, look at that.
It's always been popular. Payments, if I'm right.
It has been popular a long time, isn't it, Bango? But I don't know much about them. We should have a look at their half-year results maybe for tomorrow and see what they're like.
Sounds good.
Cool. Okay. So let's just look at the front page. Mila. Safe. What's it called? SFE. Look at this for a big fall today, John. And this is share screen. Let's get up here. I mean, it's in a downtrend. Like I said, that's almost again, if you look at the basics, I know people say, experienced charters say, golden cross, I look at price action. Yeah, but the moving averages are a smoothed out reflection of the price action, right? And that's an obvious, death cross there from 54 pence and now we're down at 10 pence. But if you've held on there, death by 1,000 cuts, and then all of a sudden you're a big drop off by like 43%. Yeah. And what do they say today? They said, they said consequence of higher interest rates have put even greater pressure on our customers' disposable incomes. Now, it's always worth if you look at it.
Could have seen this coming.
Yes, but if you're reading this and thinking, what's this got to do with me? I don't hold it. But this is about the wider industry, the wider consumer, what they're feeling, because this company is obviously at the coal face here. And they said, confidence has increased, the cost of providing our market. So basically, everything's in a bit of a saying.
These are big ticket items that this company's selling. So
what do they do? Glass,
double glazing, basically.
Yeah.
So these are big ticket items. Replacing your windows is not something that is cheap.
Yeah.
So when times are tough, you might just go out and stick a bit of putty in what you've already got, or stick with the slightly blown double glazed units that you have, rather than doing a whole new sort of upgrade of your window. So this shouldn't come as a surprise. We know, again, that the building sector is in a bit of a slump. So
and also
I would really be avoiding building materials like the plague at the moment.
Yeah. But there will be a time they'll recover, and like I said, a lot of bad news now is this priced in. I never say jump into a stock, I'd wait for the trends to change, but this is obviously historical results a little bit. And they do say the board remains, in fact, ongoing delivery of monthly profit established. The board remains confident the group will continue to deliver market share. They always say that, always remain confident. They've got to, because that's their job essentially. But if they're not confident, they get the elbow. But
I mean, there was another one recently, Marshalls, which does block paving.
Yeah,
they had a trading update. When was that? That was back in May, and it wasn't pretty. Again, it's like the last thing you're going to do when times are tight is lay a new driveway. Yeah.
There we are. This is an Novacyt chart, because they've had some results of the day, and it's a half-year trading update. Group revenue for H1 is expected to be 3.3 million. How different this was back to COVID, when they were the king of COVID tests.
They did. I mean, it was insane. The amount of revenues they did that year, were insane. I think we're talking 200 million plus.
Yeah. Exactly, and now they're doing what,
277 million in 2020.
Yeah, and they collected the cash as well, so they're a cash position of 81.7 million, and they're a 44 million market cap. Before you say this is a massive opportunity, they may need that cash, because they've got a Department of Health dispute, which the Department of Health literally is suing them. What is this not? Yeah, issued a claim for 134 million. They've counterclaimed for 81.5, which is very close to what they actually have in cash, which is odd. But this will commence on 10th of June, so next year. So you won't know, and expect to last for 16 days. So it's one of those things, like, if they're cleared, that could rise very strongly, just to reflect the level of cash they have, that share price. But it is one of those binary outcomes, isn't it? It's a gamble,
Yeah, but, it's such a messy scenario. The whole NHS procurement during COVID it's such a political hot potato. Yeah, as you say, you've got this binary outcome hanging over these shares for a long time, and in the meantime, it's got to try and shift that technology, which I'm sure is great technology, into other treatment areas. But essentially, the businesses take COVID away, and it's kind of back where it started.
So it's a classic example, and I know they were the king there. It's a classic example, chart-wise, where do you get in? Because there's been a couple of fake breaks here. It's broken up above 50-day, 200-day, 200-day, and it's continued to go down. But if you look at what's not happened before ever, is the golden cross since the big fall. The 50 days never crossed the 200-day. So you could safely say, I'd wait until that happens, because the fact that the last time that happened, it was a massive uptrend. Maybe wait for that, but and you can set alerts on trading view for that.
I mean, just look at the trading update though. This is a company that's now got to shift away from COVID.
Yeah.
Non-COVID revenue continues to build. Q2 showing 3% growth over Q1. I mean, it's not exactly blowing the lights out.
No.
So you'd really want to see it making much more rapid progress than that to become a non-COVID testing company.
So
there are a lot of applications for this technology, but it's just a question of demand. There just simply isn't the same level of demand for other types of testing as there was for COVID at that point.
A stock I held a while back, but I got out in the bear market because I started my portfolio. It was hurting. It was hurting a lot. But maybe one I shouldn't have got out of was eEnergy. If you can just on the page there, John, can you see the page? Have you got the page up where it's or if you can get the results up, eEnergy, because a decent top line growth, and the chart is a bit of a nightmare from here. But now even if you look at maybe I'll share the screen there. Even if you look at it came to the market with a lot of hype here. From 5 pence up to 27 pence. And then literally, look at that. You can literally draw a line always pretty much down there. And when it breaks that, maybe breaks. I mean, that's essentially the 200-day moving average, I suppose. No need to put a line in there. But it has, recently come off the lows from 2 pence up to 6 pence. When you get these, off the lows rebound, they're very aggressive, but they're hard to guess where they come from, and now we were getting this like that V-shaped recovery almost, and then consolidation, and now it's risen again today. It opened high today, but that's a start to me. You can see pretty much that's got to be the bottom there. But
they start generating good, decent, trading figures. Probably they start generating a bit of cash. I noticed that the cash position was sort of whittled away slightly.
Over
the course of the year.
The thing that scared me, I didn't like, was that I'd take out debt. I think they should have raised a bit earlier, I think, and they didn't. Left it a bit late, I thought, and then they took about a bit of debt. And I thought a small cap company taking out debt is not good. I just got out, but I mean, I think the top line growth there. Hopefully, that will feed through. The margins will get better, and hopefully they'll pay that debt off.
Yeah, to remind me, Justin, what exactly does it do?
So they do energy as a service. So it's very clever. So anything. The money they save you pays for their subscription. So there's no upfront costs to customers, to small bit and medium businesses, businesses, and literally, so they'll go to schools, for example, change all their LED, put smart meters in, all that stuff. No upfront costs, and the money you save on that. Well, in fact, you save so much money that you pay the money to subscription service, and you'll save money as well. So it basically takes a lot of capital off balance sheets for schools, and it frees them up a little bit to do other things. And this company will then manage it all for you, from EV charging to solar panels to all that. So it's really clever.
It's really interesting. I was actually speaking to the manager of an investment trust the other day called Triple Point Energy Transition REIT.
Yeah.
And one of the things they told me was that the biggest growth area in sort of renewable technologies, it's not wind farms, it's not solar, it's not any of the sort of big project stuff. It's basically going into companies and helping them become more energy efficient. It's sort of bottom up approach to net zero rather than sort of top down. We're going to get to net zero by 2050 government proclamations. So this is in the right place, and demand is building, and what happened, obviously the energy crisis last year has woken a lot of companies up to the efficiencies that they could make. There is a capital cost to doing it, so companies like this can really help organizations manage that transition and save money on an ongoing basis. So I think it's in a little sweet spot, probably worth another look.
I really liked it, but the bear market hit, and it took a massive hit, and they needed funding. And then what happens is, when you need it, the best time to raise money if you're a company is when you don't need it, and then it's easy, you can take your pick and not care. But when you actually need it, you're desperate, the market sort of knows, that's it. It gets hurt. Share price goes down, the level which you raise will go down, and then all of a sudden there's less takers. Comes back just to the point we make about scaling up the other day. Yeah, exactly. It's going to be well managed, and they are scaling very quickly. I do like the growth they have, 50% top line growth. ASOS chart is a bit of a nightmare, isn't it? Even though Mike, impact, if you zoom in very closely, to me, Mike Fraser Group took about 15% in this now, but you've got a double bottom here, which is quite nice, and we're now above the 50-day moving average. What's been nice is break the previous highs, and we're sort of at that nearly. So if it can break these previous highs, I'd say around here, it may be start up trend, but maybe it's too early. The 50-day moving average is a bit steep. It needs to flatten out a bit sometimes, So I don't like this company. I just don't like it. I don't like fast fashion. I mean, it's a good trade stock. It's a good trade stock because there's literally lots of volume in there, and it can be quite volatile. But like I said, it's gone from 320 to 420, so they're in a range. I just think the whole basis upon which this industry was built has changed. The fact that the sort of free returns model. Yes. It's gone, and that really was the only way that you could convince people to buy clothes online was to give them the option to send it all back if it didn't fit, rather than sort of taking 10 items into a dressing room. And obviously, the cost of doing that has just risen and risen. It's massively problematic for these companies. Yeah, but, also, they need to find a new model. Yeah, exactly. When you think about it, when ASOS started out, they were one of the only online clothes sellers. You know, many of the high street sellers didn't have their own online arm or division. Next were very late in doing that. You know, they're the directory and all that stuff. And now every popular sort of clothes shop have their own online thing. And they can sell it through ASOS, but I mean, it changes from ASOS being the only outlet to there being lots of choice. You know, so there's many headwinds, and like I said, costs went up, and you know, all that stuff for shipping and commodities. All that stuff.
Obviously, it still does a lot of business. So you know, that's What I did hear the other day, John Rosier, the private investor who we speak to on a monthly basis at Vox, he's got a really nice position that's doing really well for him in Shoe Zone.
Yeah, that's done really well.
Really good. And one of the things he said, and this might be, you know, something that's beneficial to the fast fashion industry, is that the cost of containers, the cost of shipping, has come down massily. So you know, we had this spike in sort of shipping costs, containerized shipping costs from the Far East, you know, in a lot of cases from sort of the manufacturing hubs in Vietnam and India and Bangladesh, wherever they might be. And that's really reversed. So that's driven an upgrade cycle at Shoe Zone. You know, keeps pushing those upgrades through. So you know, maybe for the likes of Boohoo and ASOS that are, you know, also, you know, shipping a lot of stuff in from around the world, that they will start to feel a benefit from that as well.
God, look at that for a nasty Shoe Zone. Look at that for a nasty fake break. So gap down there on some trading update in 2019, rallied. We're back in here, and then all of a sudden it dropped off a cliff. And then you can sort of start to see that's when you get a sort of almost you know, a V-shaped sort of jump like that. It's a little bit worrying because it's maybe not sustainable. So it's got to be almost like a Nike swoosh. I like to see sometimes, and you can still see here where it's come down and it's taken a while to form that base and above the moving averages, and look at that.
That's a chart worth studying for, you know, studying, you know, hitting a bottom and recovering again.
Yeah, exactly. And that's previous highs that you can see a couple of times. They try to break above 83 pence, and then it did. You often find a strong day will break a range like that, you know, and be a strong day. That's 9.76%. You get a strong break above that range, and that's just exhaustion of sellers, you know, buyers coming in, and then from 83 pence, where's it gone? It's gone to 250. 244. That's
really nice, you know, an example of that. You know, you can't write sectors off entirely. I mean, I'm not a huge fan of retail. I think cost of living crisis will bite, but Shoe Zone's done really well. The other one I like, you mentioned it a minute ago in relation to ASOS, is Frasers, the old Sports Direct. I mean, you know, whatever you think, whatever people, I've liked this company for a long time. And you know, basically, you know, it was sort of Mike Ashley is persona non grata in the city. He's not well loved, to put it that way. You know, and they were the target of, you know, all sorts of newspaper stories about 0 hours contracts and such and like. But it's a fabulous company.
Well, let's look at Frasers. I've just looked on
you know, this buy and build strategy is great.
No, he does literally. He's buying everything at a bargain bucket price. I just want to see.
He's a proper trader.
I had an alert then on what's happened, because I know that we Fed raised rates by a quarter of a percentage point yesterday. This is pound euro, and I had an alert there because it's dropped down. So obviously, have they raised interest rates yet? Because they could do it today, the ECB, aren't they? So I suppose that's why the pound's getting weak against that.
But they'll probably do. The ECB will probably do a 0.25%, and you know, maybe it's sort of a bet on the speculation that we spoke about yesterday that the Bank of England will not. There's certainly a lot of pressure. The Chancellor's Treasury Advisory Committee is suggesting that more rate rises could do some real damage to the UK economy. So I think there's a lot of political pressure coming to bear at the moment that we do, in fact, that the Bank of England does, in fact, halt rate rise at the moment. And we know what political pressure can do at the moment, certainly Alison Rose at NatWest knows what political pressure can do. Seems like Rishi Sunak and Jeremy Hunt got involved in that.
Yeah, I just want to look at the Avacta chart because it's a very interesting level here. We're basically around about £1. And you can see here, it's for a couple of times, round figures sometimes in charts really work. But as you see, going back to 2020, it broke through that, bounced on the pound, came up there, bounced on the pound again, couple of tests here, up there again. And so many times it's bounced on this pound level, gap down. When it tends to go below it, it tends to rally strongly back up to the pound level. And now, it's just grinding down below it. So if they have news out, it'll probably rally. You know,
it's really good. Avacta's really good. You know, Avacta's. I see that as basically the one that came out of the sort of COVID era.
Yeah.
You know, with its business really intact. You know, it has more strings to its bow than testing and yeah, some. I mean, Paul Hill speaks to them quite often and writes about it.
It's a really well followed stock. A lot of people in private investors
yeah.
know the story very well, and that's what I like about private investors. There's a lot of shrewd guys out there, but if you know the story, it shouldn't get shaken out because, like I said, it's if it comes out with bad news, obviously, or something happens, it may probably drop down. But I'm thinking it's bounced so many times off this pound level. But yeah, so there we are. Quickly, let's just cover some headlines, John, from Business News. People are angry at British Gas because they've made 969 million, and they said 500 million of that was due to the changes in the price caps that went up. And by contrast, last year they had a profit of 98 million, so they've done almost 10 times. And you can see why people are annoyed, because there are small businesses who are struggling to pay their heating bills, people at home struggling to pay, and 969 million half year. That's almost $1 billion in profits. There is something wrong with the system, isn't there? When that happens, when the masses are suffering, and literally small businesses are suffering, but the big boys are making tons of money, there's something wrong. Often I think government intervention is too much. Intervening on interest rates as well, putting them up to extremes, down to lows. Stop messing around with them. Just keep them at 2% or whatever you need to do, and let the market sort it out. When you start messing around and getting involved, caps here, caps there, it just messes up the market. There's a mechanism there that sort of works with efficiency.
Centrica's been a huge beneficiary as well of, the collapse of many of the sort of smaller independent energy suppliers. That were, they really wanted to make this market more competitive. Therefore you had this proliferation of energy suppliers, which then when the sort of huge spike in gas prices came, a lot of them were just simply not capable of witstanding it. So, we saw a lot of companies go bust, and, essentially sort of left to pick up the pieces. And I mean, bear in mind that British Gas, I mean, it had many, many horrible years. If you were a shareholder in this company, for a long time, it's been an absolute disaster. So yeah, I mean, you could point the finger and say profiteering, but for many years, the market interference, government interference in the market has also made it very horrible to be a Centrica shareholder.
Yeah. Do you know what? By the way, Phil was just commented, said he's a holder of ASOS, and he said it's been badly managed, inventory out of control.
Probably
Unfortunately, I own ASOS, haven't sold. Two laughy faces. Christ, wish me luck. One of the big mistakes. Do you know what?
It has been badly managed. That's exactly right.
One of the things I've talked on momentum a lot, and I focus on it a lot in the bear market because I've been obsessed with it, because I've been in companies I've really liked, and they've, the trend has started going down. And almost like if you want to, if you really like a company, just a simple thing: if the share price is not above 200-day moving average and it's not moving up, the moving average, I'm not talking about moving average going down, but it's almost flat, then avoid it for a while, because it may be a downtrend if you're not familiar with charts. So obviously you can get a bit more sophisticated, but it'll help you a lot just with momentum. It doesn't matter what the story is. If the momentum's against it, something's not right, quite. So always be there. One final thing on the stories there. What was it? Apart from the interest rates, the UFO thing, right? I don't know if you saw this yesterday. There's a UFO. Was it David Grush? He talked about non-human biologics. Biologics. How do you say
Biologics.
That? Biologics. Yeah. An alleged crash, a UFO crash. I thought, this is absolute nonsense. First of all, right, how come it only happens in America? Nowhere else in the world does it happen. Are we finding aliens, dead aliens? And I'm thinking, secondly, this is probably a boost for the film industry. That's all it is. It's a veiled boost for the film industry.
That's a conspiracy and a half. Ooh,
that's it.
Yeah. No, I did catch some of this. I mean, it was quite an extraordinary sight watching, US lawmakers interviewing, ex-pilots about their alien encounters. I've never seen.
It's distraction tactic some way. It's some kind of boost for either the film industry or distraction tactic for something else. Because that was all over the internet yesterday. I don't know what it's for, but that was it.
It felt like a distraction tactic to me. But I mean, geez, what a world.
It's only in America do they get aliens. Why don't we get any aliens?
I don't want any aliens.
That's anyway. I suppose there are aliens about us. Thank you, Matt, for that. I'm surprised it's taking this long for someone to do this for UK stocks. Well done, chaps. Thank you for tuning in. Spread the word if you could. Like, subscribe, and we'll speak tomorrow. John, are you here tomorrow?
No, I'm away for the next few days. I'm back Wednesday.
Oh, thanks a lot, fella. I'll have to get an alien in. Listen, if you can, help me out tomorrow with comments, because I'll be on my own. I'll be chatting to myself. Let's be honest, I'm used to doing that anyway. But speak tomorrow. Thanks very much for tuning in. Bye-bye, everyone. Oh, that's good. That's a good dashboard.